Hello traders and welcome to another video review. Today is Monday, the beginning of the new week, and the day is 10th of the July 2023. Let's find out what is going on the Forex economic calendar today. As you can see, after last weeks of non-farm payrolls and ADP from the US, this week doesn't have too many of the this day doesn't have the very important data for release. Nevertheless, some data has been published from the Japan in form of the current account, and some data has been published from Australia in form of the building approvals. So what we are waiting for is, of course, the data from the US in form of the speeches and the comments and remarks from FOMC Memebrs Daly, Memebrs Mester and Bostic will give a speech later on in the afternoon. Basically, we got before that we got the building permits data from Canada scheduled for release at 2:30, and then of course we got another speeches from the German BoE President Nagel. That's at 6 o'clock p.m. and at 9 o'clock p.m. we got the Bank of England Governor Bailey to give a speech as well. So situation is full of speeches and not that much of the data. No data during the London session, no data basically during the US session, except these speeches here. So maybe we should jump to the charts now and take a look at the majors at the early Monday morning. Euro-dollar 4-hour chart is showing us a signs of the strength after it broke above this short-term trend line around the level of 1.09. Then of course we made a local high roughly around the level of 1.0974. Now we are pulling back from this levels because the market hit the extremely overbought conditions on the 4-hour chart. RSI is of course back to the 14 periods, is being counted back to the 14 periods. So very nice breakout, very strong breakout on a very high momentum. Now we are heading towards the level of 1.0935 to test it, because this is like a technical resistance for the price, and it looks like the market wants to test it, because that breakout here wasn't tested yet. 105 and 50 periods moving average, both of them are located at 1.0912, 1.0891. so this is the zone that is very vital for the bulls, because any violation of this level would likely means that we are going to test that breakout of the trend line here, and then eventually either bounce or test this very nice technical support at 1.0836. So still the range trading, still the market doesn't make it move, doesn't make the decision. We got some kind of an internal breakout to the upside, but no new high, no new swing high, no new low was made on the euro dollar as well. So market participants await the further development on the euro dollar. British pound has made a very different technical situation, because it looks like this high and this high might contribute to a pattern which is known as a double top pattern. So if this level of 1.2850 is not clearly violated, so there is no daily candle close above this level, then we might have a double top made on the 4-hour chart into the extremely overbought market conditions. So right now we are pulling back from this conditions, right, and we are pulling back from the potential double top level. The first technical support is 1.2779, then there is 1.2738, and then 1.2726. We are still trading above 150 periods moving average. So as far as I can see, this situation is still dynamic, but it's still a kind of a bullish because we are trading above the moving averages on a 4-hour chart at least. So in the short term, if this pattern fails, so there's another breakout to the upside, then that situation will be very bullish and might result in another wave to the upside. In the other situation, if we got below this horizontal levels of technical support, or even below this moving averages, the next target for bears is seen at 1.25 and 90, where the technical support is. So please keep an eye on this situation here on the 4-hour chart. It might result in some kind of completely different point of view in the higher time frames, like for example daily. So that's the situation on the British pound. Let's find out what's going on Bitcoin. So we got this nice rally with a new potential swing high at 31,514. Nevertheless, as you can see, we have the pattern which is called bearish dark cloud cover on a 4-hour chart. So this is very as you know, bearish and negative for the price of the Bitcoin, because it means that this long period of the consolidation is being used for the distribution of the Bitcoin all over the place. And right now, if we take a look here, let's make it a little bit there you go, a little bit lower, and we can see that the key technical support are roughly around $29,000, basically 29,931 is the low here. If this technical support holds the bearish pressure, then of course the situation might be comfortable for the bulls, because they will be ready to make another swing high. However, because it's taking so long and it's full of this patterns that looks like there is increased bearish activity just after the 50 periods moving average was violated, then of course we might assume that the Bitcoin market is right now under the bearish pressure, despite the fact that you don't see it on the chart yet, because we got this very nice 25% rally on the Bitcoin just happened recently, right? So narrow range over the weekend between two horizontal local technical levels, and between 50 and 100 periods moving average might indicate that the volatility is subdued, and the market participants await the fundamental trigger to spark some sort of the movement, some sort of the dynamic movement to the downside or to the upside. Right now we are a little bit skewed to the downside because the momentum is negative, momentum is weak, like a 40 points, which is not that much. So if we break below the 29,556, this down movement is confirmed. And the target, if I could find one, is not that far away, because that might be the high from the 29th of the May, is located at the level of 28,446. So we are wasting very big amount of the energy on developing the upward movement. However, there is still no result from this effort, and it looks like the partial distribution is taking place right now. We might see the wave A of the correction, wave kind of a wave B, and then we need the wave C of the correction to the downside. Then the market would be ready to terminate the correction and reverse to the upside. All right, so that's the situation on the Bitcoin. Let's just take a look at one more market. In this time, that will be the market of the gold. What's happened on the gold market just recently? As you can see, despite the recent NFP payrolls data release and the other data releases, the gold market doesn't actually move that much. It made a local double top level at double top pattern at the level of 1934, and now it's pulling back again below the 50 periods moving average. As you can see, if we break 100 periods moving average, which is located at 1915, then of course we can test this loss of $1,902 and the swing low at 1,892. So let me just put this technical support on this very level, so you got it covered. There you go. This is the technical support, and we can of course assume that there is some sort of the line here, short-term trend line leading of course to the upside. It will provide some kind of a support, but any breakout lower would eventually result in a spike towards the last swing low, of course. So the situation on the gold is still prevailing to the downside. It continues to hunt the traders, because there is no chance for the bulls right now to break anywhere higher if the $1,934 per ounce of gold is not clearly violated. This apparently level corresponds very strongly to this kind of a narrow zone that you can see here between the lows of the end of the May and the beginning of the June. Without any breakout to the upside, there is no way we can rally higher on the gold. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.